Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. How are you today, and what's been going on this week for you?
Yeah, hi. Well, I'm great today. It's been a good week. Simply, we have a lot of conversations with investors, a lot of focus on our funds, honestly, and
That's
that
good.
we're happy about the attraction they have. So that has been the main thing. Of course, always the market, and we have the big US happening next week. That is, of course, also sort of
Yeah.
a discussion point. What about you, Mel? What's cooking in Manila?
Oh, so actually, it's been a bit quiet. I think this is the calm before the storm that is coming next week. So a lot of major economic and political developments happening real soon. So of course, we're looking out for uh, the Chinese markets, Japan's political navigation towards their elections from a few weeks back, and of course the US elections, the main thing basically. And also
Yeah.
there's the Fed decision coming up, so a lot of
Mm,
wait and see happening across the
yeah.
markets that we are monitoring. But otherwise, here we're bracing for a long weekend that's looking like it's gonna be stormy. But yeah,
Yeah.
otherwise very upbeat still. So
Yeah.
Peter,
Yeah.
yeah, we have a lot to cover today, as per usual. So, just an outline of what's coming up in this episode. We're going to briefly discuss the surprisingly positive Eurozone growth data, the outcome of the Japanese elections, and we're going to walk through some updates regarding the presidential elections in the United States, the US ban on investments on certain Chinese technology, and Israel's retaliation towards Iran, and of course, our global outlook and the scenarios that we're considering. So
Mm.
let's get right into it, Peter. What's happening in your side of the world?
Yeah, there's a lot of on the plate today, and
Yeah.
let's kick off with for some good news out of the Eurozone. It's not every day we get them, so let's celebrate that one. And that was yesterday. We had the Q3 gross GDP growth number from the Eurozone showing a plus 0.4 growth actually
Mhm.
against an expected 0.2. And of course, first thing is to look into what's going on, what are the good news, and as always, does that lead us to change our view, yeah, short term, long term on Eurozones, on stocks there. Um, and it should
Right.
be said that France, they had an uptick in their growth from 0.2 to 0.4 due to the Olympic Games. They will
Aye.
come back, yeah. So they will come back in sort of the sleepy, just above the 0 point line. Um,
Mhm.
Germany surprised on actually with an 0.2 growth, where
Mhm.
so we have been talking about it'll be negative again. The whole market has been expected
Right.
0.2 minus 0.2, yeah. So that actually went up, but it was a bit balanced by the Q2 number,
Yeah.
where the first reading was minus 0.1, but that was adjusted down to minus 0.3. So if you look
Mhm.
at the year so far, it nets out to be still sort of yeah, it's more or less zero. And there's no outlook. Also, the leaders from the German industry are out saying there will be no growth this year in manufacturing output, and they are also saying confirming that 2025 they simply see no growth. There's no reason for us to change the stand as long as we can see Germany is a zero growth area. Very much also the same for the Eurozone. There is one particular outstanding performance, that is Spain, running
Mhm.
at a 3.4% growth, and that is impressive. but part of it is from immigration. Then tourism. Again, this year, Spain had a enormous gain in tourism, but what they are gaining is average tourism. It is exactly the tourism that people are demonstrating against in Spain. So it is sort of not any sustainable, strong business case. And if you look into a couple of other areas, yeah, then they increase the public spending. Not a healthy way to have GDP growth. Yeah. So there's nothing about the Spanish growth where you could say, wow, it is not so. They can sort of come up saying it was a tech sector or sort of an
Yeah.
AI sector that really took off. No, it was simply very, very plain, very average, and some public spending is not where we sort of where we cheer, and it doesn't change our view on Europe as the region that will lag behind short term and long term. And basically, to conclude, no no reason to change the outlook and say stay on the way
Right.
to the Eurozone and Europe. Yeah. But it was interesting, and certainly I was when I saw the news, I was flying into the laptop and say, "Hey, okay, what's going on? We need to see this." But it didn't really sort of.
Yeah.
It wasn't
It's
that exciting.
probably a one-off, right?
Yeah, not so exciting as it should have been. Anyway, do you have any sort of more exciting story on your side?
Well, exciting. That's really what's happening in Japan's political scene. So they're known for being a very stable democracy, but right now, apparently, it's starting to lose that edge. So for the first time in 15 years, the ruling Liberal Democratic Party just lost the majority vote in the House of Representatives, and
Mm.
that's that's really an end of an era. The new
Yeah,
prime minister's plan, he called for a snap elections and it backfired pretty
yeah,
badly.
completely,
So they lost that
completely.
majority vote, and it's adding to worries towards Japan, which is already, battling high inflation, high wages, but
Mm.
uh, an aging population that's also bringing the manufacturing sector a bit lower since you have less workers and cost of living and cost of productions becoming more expensive.
Yeah.
It has weighed on the yen. So the
Mm.
yen has hit 3 month lows. Good for
Yeah.
tourists, but not necessarily, and also good for the export sector. But otherwise, what's the indirect positive effect though is that stocks in the Nikkei 225 are up in the past few days. But in terms of the overall effect on the economy, uncertainty is increasing towards Japan. Of course, the house plays a pivotal role in setting the budget. Of course, that includes or covers debt management as well, defense
Mm.
policy, international relations, and of course, there's always this uncertainty about what's going to be the next moves of the central bank because it has just been a few months ago when they exited the negative interest rates, and they were anticipating that they were finally gonna raise rates a lot higher because effectively
Yeah.
it's still negative. But this, the added concern towards the economy is causing additional jitters. And of course, you don't want that at a time when everything else globally is also looking not so certain. So a lot to watch out for that. It's actually quite funny to see that, oh, someone called for a snap election and it didn't go their way. So what's that? Is that misplaced confidence or what? So yeah,
Mm.
very exciting indeed.
That was surely a prime minister that was not aware of where the
Yeah.
electorate, as his voters are, and yeah, I would say as after I've more than around 40 years in the financial markets, I'm
Yeah.
grown up with Japan and LDP as it has
Yeah.
always had the power, and probably it will stay so as by far the biggest party. Yeah. But
Mhm.
it is interesting to see how the whole Western world as this fatigue among
Mhm.
voters. It's very difficult for the Western world for the leadership to come up with a plan saying, okay, so this is how we get back to a healthy 3.5% growth rate per year. Yeah, and so in a global context, it fits, but it's not a happy fit. Yeah, but it just is impressive.
Mhm.
But yeah, so Japan is that was a backfire, and yeah, that
Yeah,
happens.
and speaking
It's
of
just
the
the
election,
economy. Yeah.
yeah, there's another major election that we're watching out for, and of course, that's in the US. Only 5 days to go, right?
Yeah.
Between Trump and Harris. And what are we seeing right now, Peter? We're seeing that I'm seeing that news websites are reporting that it's still a very close fight, but uh, of late there are reports that Trump could be having a slight advantage.
Yeah, you and I, we've of course been discussing this sort of a bit more intensively in the past week. Yeah, as it is getting close now, and as we don't have any forecast ourselves, of course, but
Yeah,
we do spend extra time on getting polls from all kind of different sources, and also look into, of course, like anybody else who is looking into a crystal ball to see what happens in the swing states. And the way we see it right now is as a, we simply we are not advocating for one or the other candidate to win, and we don't
right.
talking about what we think is good and bad in that sense. If we look into where the also the very razor thin leads are in different swing states. As we're talking about 0.2 in difference. Yeah,
Yeah.
it is really very strong inside the statistical error, so to say. Meaning a 0.2 lead can be everything.
So
And
close, right?
it's too close. But anyway, if we add all these things, then the winner would be Trump.
Mm-hmm.
That is where we stand as of today. Today, the 31st of October,
October.
in the morning, European morning, as we are recording this. And this is simply how. This is what we can see. It looks like he has a small lead. That lead can be erased within hours. This is
Yeah.
how. Overall, what we are looking at, and that is if one of the two candidates should win what we call the whole plate, yeah, meaning
Mm-hmm.
win the whole office, getting the
The White
presidency,
House.
yeah, and then also wins the Senate and the House, as the two
Yes.
chambers in the Congress. If that goes to one person, to one and same president, then we are most worried, and it doesn't matter if it's Trump or Harris, because
Yeah,
we,
correct.
what we think is none of them will be able to come up with such a strong economic reform plan of the American economy that strong growth will return. There will be growth. American economy is doing okay, it's robust, but
Mm-hmm.
to get back where people really say they're satisfied, that's another issue. Yeah. But if the president, the coming president, has also runs the control of the Congress, the two chambers, then they can issue debt. They can issue government debt much easier than if it's a split control between
Mm-hmm.
Democrats and
Republican.
the Republicans. Yeah. So if that situation occurs, and it's not the most likely, but again, that is very close as well, extremely close. So it
Right.
is unlikely either. Then we are nervous. We are most nervous. And that is where we actually could foresee a reaction on Wall Street in the bond market, saying, okay, people will actually look already now on the after the election, sort of sell out on U.S. Treasuries.
Mm-hmm.
Otherwise, yeah, if Harris wins, we have touched it before. It looks a bit more like business as usual. If Trump wins, the U.S. business has been preparing for that scenario mostly, I believe. Also because he was in the lead a long time before Harris
Right.
took over. and there'll probably be actually sort of maybe a small uptick on Wall Street. Nothing big. It is be more the global reaction. If Trump wins, we will see more regional sort of infights,
Yes.
and different economic regions in the world sort of getting more focused on itself, because that will be sort of the trends that will be set out of Washington. Yeah. And as Asia is the biggest economic zone in the world, also where we have the stronger growth, it is most likely that that will actually intensify. That the Asian region will try to boost itself, and again, US somewhere in between, and Europe lagging more sort of behind.
Mm-hmm.
This is what we think, if the different persons candidates should win. But we are excited, and we can feel
Yeah.
also investors are a bit sort of
Watching
it's not,
out closely.
yeah, it's not the biggest talk point actually, but it's
Oh,
like investors, they want to have sort of they will be happy to get it cleared, so they know how the world looked like after the election. That is the thing. Mm. But interesting. So this is, I think, this is our house view, isn't it? Well,
right. So actually, we've written a lot about this developments in our magazines, in our Learn Investor Insights website, which you can actually visit, by the way. But yeah, another interesting development in the United States. We've seen the past few days that the Treasury has issued an order or a rule that limits American investments into developing Chinese technology. So they're citing it as a way to improve or protect national security. And that's coming from Joe Biden. And from just a few months back, he also imposed a 100% tariff on China made electric vehicles. So it's really becoming a hardline stance, I think, like for the American government to really clamp down on access towards Chinese technology. In a way, it's standing in the way of further R&D for military and research and development as far as equipment and intelligence materials are concerned. So it's really whether Harris or Trump wins, that's the direction as far as the US's stance towards China is concerned, right?
yes, I agree. The only thing is that also the latest sort of blocking of US capital going to some of the high-tech areas in China
Mhm.
that are supporting or working for the Chinese military. And that is with the argument saying, okay, we can't have US capital um, invested into development of sort of making counter systems to the US Air
Mhm.
Force, as a meaning they
Right.
they will make AI programs that could hit US planes. Yeah, so that is okay. But does it actually change a lot for
Mm.
the Chinese stock market, for the capital inflow to China? Um, does it have any effect in reality, or is it just a political sort of signal?
Yeah. So far, it's looking like a signaling device because,
Yeah.
um, yeah, a lot of Chinese technology is state developed, I guess. So it's not necessarily dependent on American investment, so to speak.
Yeah, and a lot of how to say companies are already on the no-go list, on the US no-go list. Yeah, so this
Ah.
is just added. And in reality, US investors, they have stopped investing to China. So
Mm-hmm.
it's not really hurting the capital base for these companies. And the interesting thing is that China has not reacted on that one yet. But
Yeah.
in this ongoing trade war, and also as a sort of capital blocking war between US and China, the the Chinese government has demanded a Chinese supplier to a US manufacturer to stop their supply, and that is the supply of batteries to drones. And that US manufacturer is the biggest supplier to the US army of drones. So they simply they have a problem now because they're not getting their batteries,
Mm-hmm.
and they can't substitute the supplier as fast as they would like. So it may be by end of Q1 next year. So this is going back and forth, and actually, so the U.S. so far has hit them self pretty hard, because they don't get the drone supply they used to for the army.
Another
And
another plan that backfired.
yeah, exactly. This is the world is complex. Yeah, we can discuss the global world, and pro and cons, but it is there. The world is really globalized, so it's not so easy. And that was just another story in that war that is actually doing less good, yeah, than people I think. Anyway, interesting. Another upgrade in this kind of capital base and supply war, but actually it's not really
Mhm.
it's not hurt a lot, but it was just separate the world again. It's sort of underlying that trend, yeah. Uh,
Actually, another surprising development in the past few days is that Israel has struck back against Iran. But
mhm,
what happened in the past few days is that world crude prices are actually went going down rather
mhm,
than what you would expect that whenever there's an attack within the Middle East, it's gonna raise oil prices. But currently, the attack has towards military bases in Iran. Um, it was followed by falling oil prices, and it was
exactly.
kind of surprising. And apparently the slump in global demand, especially from China, is still a lot weightier compared to this.
Yeah,
I guess
exactly.
the retaliation attack is kind of expected, and it was it was because the attack was targeted towards military bases rather than oil or reserve facilities, that
Yeah,
it didn't really cause a lot of movement and or a move higher for oil prices.
yeah, exactly. And the situation in between Israel and its neighbors and sort of with
Mm-hmm.
broader understanding a couple of times lately, and we wanted to just to touch base on that one again. And I was Saturday when Saturday morning European time as attacks were taking place. It was really on my mind to see, okay, so what will the Iranian government's reaction
True.
be as a verbal, the first verbal reaction? Yeah, well, how would that look like? Yeah, and that was a bit in line with what we have been talking about for several weeks. That they didn't come out with a very harsh comment. Actually, downplayed a bit. Yeah,
Right.
and it underlines our view that in the whole region there is enormous political pressure for not escalating this conflict into a sort of a
Bigger problem. Yeah.
really a really big war. Yeah, we argue, we continue to have the view that there is so much pressure from the Arab countries, the Middle East. They don't want war. They simply want to develop the region and
Mm-hmm.
focus on prosperity and do something good for the middle class. And this is actually an important factor in how we see global risk. And that is sort of to finalize that one, yeah. So we stay with the view that we keep a close eye on what's going on, but there are big forces to try to, yeah, basically to de-escalate the situation. Yeah? And these forces we consider as being so big that they have the biggest dominance. Mm. Yeah, so it's yeah, interesting topic, and we wanted to sort of round it off at least.
Yeah,
So
and you actually got it started already, Peter. So, of course, here we like to review our global outlook. We don't frequently change it because, of course, it's our long term view. But You're correct, Peter. As far as our view towards Asia is concerned, there are these developments that warrant monitoring or close watch, for example, politics and development in China, which we have also discussed in past episodes that there are additional stimulus packages introduced, and that's supposed to perk up demand and perk up activity. And that's encouraging. And we have always maintained that growth here is really attractive, and we we remain positive towards developments in this side of the world. But towards the Americas and Europe, Peter, how do you view the latest news and developments that we've seen?
Yeah, also we stay as a house with our optimistic view on the world. We go into the U.S. election, so to say, and keep the view that the world offers more upside than downside, and that means that we will yeah keep the advice about being overweighted stocks, overweighted
Mhm.
risk, overweighted also. Sort of private equity investments. We are okay with non-liquid investments as well, and that normally is good in a world that is, after all, manageable. And we long like the long end of the yield curves as a where we can maximize the risk. We're happy
Mhm.
about emerging markets risk. US we okay with, despite what outcome there may be. So yes, we just stay overweighted risk, so to say, also ahead of a U.S. election, and then we'll see. It's as we can, as we okay with that, yeah. So that is basically sort of the sunshine outlook. To be honest, still globally, I know you would have rain in your long weekend, but in the financial markets, we we um, we stay
Continue the
firm.
work.
We're happy.
Yeah, and that's what we have for the episode today. Next week's episode, we'll probably have an idea who the next US president will be. So let's watch out for that. Thank you to our listeners for tuning in. We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.